Hello everyone, welcome to Analyzing ETFs. I'm your host Dr. B. Today is episode 24, February 27th, 2026. Well, what I want to show you today are the gains in 1 year, 5 year, and lifetime over 5 ETFs. The first ETF will be over here. Let me get my little red pointer here. VTI, that's the Vanguard Total Index. And then followed by the International Vanguard International Index Fund, followed by, I would say one of my favorites, but not lately, hold on for dear life, the Van Eck ETF Bitcoin. Then followed by the tech sector ETF, the Spiders ETF XLK, and then followed by the Russell 1000 IWD. So if you look at all 5 of these, what you can see here, you'll see what their gains are in the past year. This is based on February 25th, 2025 to February 25th, 2026. So we'll go quickly here. Vanguard Total Index has a gain of 16.7% in 1 year. International has done real well in 2025. They did really well. They were up for the past year 33.9%. However, as you know, Bitcoin has been down lately. Here's an appearance here. Before I continue, this is Puss in Boots. He's the world's most friendliest cat. And he's got to make an appearance once in a while. And then he takes off. Okay? Now back to what you came here for. Hold on for dear life. Yeah, you have to. Here's Bitcoin ETF. It's down 21.4%. Bitcoin is now trading around $68,000, $67,500. I think it ended on February 26th when the market closed. Technology has been up well, 25% in 1 year. And then the Russell 1000, 16.53%. However, let's look what happened in 5 years. This is why you want to hold on for dear life with most of these. I'll get to most of these in a moment. Absolutely the keeper here would be the total index. It's up the last 5 years, 76%. International, though, again, international really came up in 2025. So only in the 5 year period, it's only up 39.6%. But again, any licensed financial advisor would tell you hold on to international or purchase some share of international. Now, for HODL, it's only been around since the 31st of January 2024, so this has only been around for 2 years. It's up 62.5% for 2 years. That's excellent. Again, but it's been down a lot lately. And it started going down after August 2025. Technology sector, it's done remarkably, up 122% in the last 5 years. And then the Russell 1000, more on that later, that's up 66%. Okay, now lifetime is very important because you want to hold on these, yes, throughout your life, and hopefully you'll have a long life. So most of these started in 2001, in May 31st, 2001. Here's the total stock market. It's up 495.5%. We're not going to get into the change here. This means a change in the ETF price. I'm not going to go over that. You can look up that at your leisure. International has not done as well. It's been around since 2011. It's up 68.8%. But again, any licensed financial advisor will tell you hold on international. Again, hold on for dear life. The Van Eck ETF of Bitcoin, that's only up 62.5%. But again, that's 2 years. Look at technology. What technology has done in 25 years is amazing. It's up 935%. Everyone should own technology. And then Russell 1000. It's up 273.5%. And where do I get information from? Yes, right here, Morningstar.com. They need to sponsor me. Okay, now, here's a question I have for you. What is beta? Because sometimes you'll look things up and it'll mention about beta and something called alpha and then R squared. So beta is an ETF beta measure. What this does, it measures the fund price volatility and risk relative to a benchmark index, usually the S&P 500. So a beta of 1 indicates that the ETF will move in line with the market, which is good. That's what you want. You'll see these mostly with the total stock market, international and domestic. A beta greater than 1 indicates higher volatility, more risk, but yes, more reward. While a beta less than 1 will indicate lower volatility, and beta will help investors gauge sensitivity to market swings. So we'll get to beta, and here is an example of beta, 1.03 from the total stock market. The R squared we'll get into a moment, that's 99.26. But here's what I want to talk about today, risk. We want to focus our attention on risk. Now, it doesn't matter if you check the 3-year, 5-year, or 10-year risk, it's all the same. The risk level here is 75, which means you're in an aggressive fund. But for 10 years, risk versus category, you have higher risk above the market, but you also have higher return, which is what you want. You want your balance of red and green. Now, what is R squared? This is a good number, 99.26. Let me explain why. And R squared is the context of ETFs, measures the percentage of a fund's movement that can be explained by movements in its benchmark index. Now, what does that mean? Well, a higher R squared between 90 and 100, that's what we want to look for. This indicates that the ETF's performance is highly correlated with the index. That means it has a balance of not just technology, it has consumer cyclical, it has finance, it has healthcare, it has a little bit of real estate, and a little bit of natural resources. Most index tracking ETFs aim for an R squared near 100. That's perfection, meaning that the returns closely mirror the benchmark. So 99.26, this is where you have to own a total index, a total stock market index. It may not have to be Vanguard, it could be another company. It could be BlackRock, it could be Fidelity, it could be Schwab, whatever you want. However, if you have a low R squared, anything below 70, that indicates that the ETF's performance does not closely follow the index. This is commonly in actively managed ETFs where the manager deviates from the benchmark to seek alpha. Okay? Now, you have to know what's in your market. You have to know what's in your ETF. So as total stock market, here are your top 10 holdings. We're not going to go through all of them, but anybody who's an investor should have heard of all 10 names. NVIDIA, they posted gains yesterday afternoon when the quarterly statement came out, and they've done well. But today NVIDIA went down, and so did technology, and so did semiconductors. Went down today on February 26th. No big deal. Doesn't matter. Yes, you're seeing this on February 27th, but I'm recording on February 26th. Apple, yes, you want to owe some shares of Apple. Microsoft, if you have Apple, you have to have Microsoft. Amazon, Alphabet, that's Google. Broadcom, Meta, that's your Facebook. Alphabet again, Class C. Tesla and Eli Lilly, there's your top 10. Now, let's look at international. International is comprised of about 8,500 stocks. It is also aggressive, but not as aggressive as the total stock market. And international has done well in 2025 and also early in 2026. Now, even though I had this on 3 years, doesn't matter if 3, 5, or 10 years. Right now, in 3 years, you're dealing with average risk versus average return. The R squared is at 97.82. Very good. It's above 90. Your beta is at 0.99. So it's relative. So VXUS is relative to the total international stock market. Okay. Again, risk score is 66. So this is less risky, but again, less risk, less return. Except you have more return in 2025. Again, this is why you have to invest in everything across the entire world. Now, here's something you may not know. You may not know these companies. Again, if you're into semiconductors, you probably heard of Taiwan Semiconductor Manufacturing. ASML, I don't know what that is. Samsung, yes, we've heard of Samsung. Tencent Holdings, Alibaba, we've heard of. Anything else down here? AstraZeneca. So a lot of these, some of these we may not heard of, but again, if you take a look at the total weight of each one, it's spread out over 8,500 companies. So not much weight at all. Most of the weight is only 3%, and that's in Taiwan Semiconductors. The Russell 1000. This is a value ETF. So again, this is less risk, less reward. But again, it's also aggressive. So over 10 years, this has an aggressive score of 67. It's a usual number lately. But again, average risk versus average return. The beta is at 0.94, so it's close to the market. The R squared is a little bit less at 84.83, so it's not exactly at the benchmark or at the index. Now, what's in the Russell 1000? Everybody's sharing some Berkshire Hathaway. Thank you very much, Warren Buffett, for starting this ticker symbol. He wasn't the original owner of Berkshire Hathaway. He bought the company, I believe, back in the 1960s or 1970s. J.P. Morgan, Alphabet, Exxon, Johnson & Johnson. These are primary dividend-paying stocks. Alphabet, Walmart, Micron, Procter & Gamble. Again, I don't own these individual stocks. I do own the ETF, which my company does manage. IWD, the iShares Russell 1000 Value ETF. Okay, let's go a little bit more risk here. This is technology. Now, I've heard people on the radio and on TV, you should know more than 20% technology. I disagree on that. I think a lot of us are earning. I own more than 30% in technology. Yes, it is high risk, but look at this. Look at the risk category here. It's not much risk, but look at the high return. So this is fantastic. If you're in the green with risk and the green with return, this is where you want to be. So XLK, I think within the past 6 months, it's had 2-for-1 stock split. But still, it's very aggressive at 96. That's a high rating. But a lot of people are in technology. Again, beta is a lot high, 1.15. This does not mirror the market. 100% has an R squared of 72.84 because you shouldn't put all your basket in technology, but you should have a good portion, no less than 20%. And maybe no higher than 30%. I do feel 50% technology is way too high. Alpha 7.87, that's incredibly high. But again, this has done really well in this past 24, 25 years. It's something that definitely you should buy. XLK, State Street Technology Sector Spider ETF. Now, what's in this? Yes, you know these companies. NVIDIA, that's a huge percentage holding, 15.8%. Followed by Apple, 13.5%. Microsoft, Broadcom. Do you see how this mirrors the total stock market? But then you have Cisco, Lam Research. I don't know about Lam. Applied Materials, I heard of them. Palantir, they've been in the news lately. They've made money a lot in 2025. And then finally, here's the one that I'm very weary of lately. It's your Bitcoin ETF. Hold on for dear life, HODL. This risk score is way, way off the charts, 254. Although my financial advisor, thank you very much, he told me, hold on to this, hold on for dear life. I have less than 1% of my portfolio is in HODL. It's in Bitcoin, it's all Bitcoin. Again, it doesn't even have a category of alpha, beta, R squared. It's not even ranked yet at all. Standard deviation, that's crazy, 87.57%. It's like the highest standard deviation score I've ever seen in any investment ever. So I wonder if other Bitcoin ETFs and Ethereum ETFs, check them out. Use Morningstar.com. And then keep on watching my channel. I need more subscribers. I also need people not to subscribe to my channel. That'll be fun to channel somehow. But if you're not, no big deal. I'm not going to track you down for money. I don't sell t-shirts or cups on here. All I do is I give educational advice. Okay? Any questions? Drop me an email or drop a message on YouTube. And if you missed my last ETF analysis, please watch this past video. Thank you very much. Take care. Have a good weekend. Peace. Keep on investing and keep on doing your research.